is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. Today's a very exciting day. We're recording this on Thursday, January 11th at 10:06 a.m., 36 minutes after the market opened. That would be the TradFi market, not the crypto market, which is open 24/7. And also the launch day for 11 different Bitcoin ETFs. This is basically unprecedented. The SEC, in order to avoid perceptions of favoritism, approved all 11 ETFs at the same time. And that has kickstarted a couple of things. One is an all-out brutal fee war between these different issuers, cutting their fees repeatedly in advance of launch, hoping to be the first one out of the gate to reach $1 billion, $2 billion, and so forth. But also a marketing war as well. And this has helped to propel Bitcoin over $48,000, at least at the time of the filming of this episode, and has also caused, I think, a renewed interest or an awakening within the traditional markets about Web3 and crypto overall. So I think that perhaps right now everyone's focused on the Bitcoin ETF and the flows and what this means for that asset. But longer term, I view this as an opportunity to really reset the conversation around Web3 and about digital assets for a mainstream audience. So we've actually got the perfect guest to talk about both aspects of this, the launch of the ETF, but also, and I think more consequentially, this idea of what this means for Web3 now. And that is Sunny Aggarwal, repeat guest, founder of Osmosis, the largest decentralized exchange in the Cosmos ecosystem. We had Sunny on, I think, maybe a year ago, perhaps even longer. And he's back. It is officially Cosmos season, or at least that's what people are saying. And Osmosis is leading the pack of all different chains on the network. So, Sunny, thanks so much for joining us. We're really looking forward to your perspective on the current sort of ETF melee that is happening, but also like looking to dig deep into Osmosis, hear what's new, and get your take on sort of what's next for Web3. So, thanks for joining the show.
Thank you for having me. Yeah, a lot of exciting stuff. It is a little, funny that I feel like sometimes like crypto spend so much time thinking about like, expecting TradFi to move our markets, but it is definitely a big in some sense like a victory. The whole like first they laugh at you, then and then eventually they join you, and so it feels like, okay, this feels like finally like a TradFi joining with this crypto movement.
Yeah, I mean, what's your expectation for this ETF launch? I mean, a lot of people were saying this was a buy the rumor, sell the news event. I guess if you bought the first rumor about the Winklevi ETF in 2013 when Bitcoin was at $100 and sold at 44,000, then it would have been a great trade. In fact, what we've seen since the announcement and at least the start of trading is that Bitcoin's actually moving higher here. Now, it's doing not as well as some of the other crypto assets. I'd like to dig into that, why that is, because I don't think it's necessarily intuitive. But in your view, like where do you think do you think there's a lot of appetite here for Bitcoin? I mean, clearly it's had a big launch so far.
Yeah, I mean, my take is I think I don't know. I think we've talked about this. I've always been a bit of a Bitcoin maxi in a lot of ways, in the sense that I think that Bitcoin is probably like the asset that, I can just go to anyone, like a non-crypto. I was at one of my friends' holiday parties, non-crypto, like a couple of weeks ago, and I was trying to like explain crypto to them, and I could like very clearly and easily articulate Bitcoin to them, and they got it, and they're like, yeah, this makes sense, or it's plausible, right? They understand the premise of like, okay, this is an alternative to gold. When you start to get into like trying to explain ETH or a lot of these other things, it's hard for them to really grasp the value prop of it. And then then you can get into like application tokens, right? Then it's like, yeah, they get that as well. It's okay. It's cash flows. That makes sense. But it's like, so I think that like Bitcoin has just the widest market, or like awareness and adoption, like whether it's from like retail, like I can go out on the street and ask a random person, do you know what Bitcoin is? They probably do, right? But also now at like the highest institutional levels, right? I think I think that like even perhaps we will see more ETFs like launch. I think now that the Bitcoin ETF rumor is has become news. Now the new rumor mill is going to shift. Oh, when's the ETH ETF going to happen, or the
Yeah.
XRP ETF, right? But I just do think that like uh this is just going to honestly cement Bitcoin's dominance for a while, right? Like people I always like joke with people, as soon as people start talking about the flippening, like when is ETH gonna flip Bitcoin, that's the sign of the peak, the top. And
Right.
and so I think that like this is just gonna cement like Bitcoin as like this is like the best like Trojan horse for crypto into like the wider world. And I think, this is why we should like all be rallying our banners around Bitcoin.
Yeah, I think
Mm.
one thing that's funny just on the flippening as well is we sort of saw a mini version of that over the last month where people started talking about Sol flipping
Hmm.
ETH, and then that sort of marked the kind of exact top of ETH outperformance versus Sol,
Mhm.
which is pretty funny to see. I am curious. I mean, obviously in crypto, there's kind of this narrative that um, Bitcoin's kind of the first one to rise, and then it eventually filters through to Ethereum, then to kind of like the large caps, and then finally the really small altcoins. Do you sort of see that type of cycle playing out once again? Just because I've been getting a lot of messages from sort of TradFi people asking like, hey, why isn't XYZ coin moving the same as Bitcoin? So I'm curious your take on that.
Yeah, that's probably is what's going to happen. I'll admit it. The insane high levels of correlation in crypto markets does always surprise me. In the sense that it's like, I used to like believe that like, okay, everything is correlated to each other because back in the day, like, rewind 5 years, like all on almost every exchange, everything was paired with Bitcoin. And that logically makes sense. If Bitcoin goes up, everything is paired with Bitcoin, and so everything will move sort of in tandem with Bitcoin. And then you saw this on like uh in DeFi, in like Ethereum DeFi as well, where everything was paired with ETH. So as soon as ETH moved, everything sort of moved along with it. But in the last few years, we kind of seen a shift towards like most things get paired with stables at this point, like Tether and USDC. And so that like logic for why things move so correlated, I it like is no longer valid. But I think it might actually just be a little bit of a phantom effect where like, the because the industry started off with everything moving so correlated, now what happens is it's built an expectation that things move correlated. So as soon as one thing moves, all the market makers, all the traders, everyone just like assumes everything else will move at the same way, and then they all just front running each other to trigger that move, and it kind of like becomes a self-fulfilling prophecy. I think that and there's like this phantom effect that's left over, but I think that as the industry like starts to have more like actual like uh I think that hopefully what's going to happen now is like as larger institutions come in, the industry is going to have to like mature a bit more on how it does like valuations and stuff. And so as like we start to be a little bit more like cognizant of what's the actual value of a lot of these things, I think maybe things start to like decorrelate a little bit more. Not everything moves together as like one big like crypto market, but like, just because Bitcoin does well, does that mean that like a DPIN application is like just gained market like penetration or a success rate? Like probably not, right? Like we have to like these things have to become decorrelated at some point. And I think
Yeah,
this
I mean,
is
some correlation is to be expected. Like, there's a
Mhm.
lot of diversion within equities. Some equities
Yeah,
go up,
of
some equities
course.
go down, and sectors are, not necessarily tied to each other. But in general, like equities as a whole are, a category of risk asset. And in periods where people are euphoric or very bearish, then they actually do typically have like a very high correlation. So
Mhm,
it's not unusual that
mhm,
different crypto assets, even though they might perform different tasks, do different things, have different value propositions, might still be correlated, particularly in times like today where it's like
mhm.
everybody's
Yeah.
happy. So let's just buy the whole market. People buy the whole stock market too, and everyone's euphoric about equities as well. Your point about Ethereum was an interesting one. we've been writing about this for a while here about the potential for an ETH ETF following a Bitcoin ETF. And honestly, I think it's just a matter of when and not if. And we actually have experience of this in Canada. Like in Canada, 9Point launched a Bitcoin ETF 3 years ago, as did Purpose and other firms. And after Bitcoin ETFs got launched, Ethereum ETFs were not far behind. And for the simple reason that the market for ETH and the market for Bitcoin are structurally quite similar, namely that each has their own regulated futures market in the US, which is something that's a big consideration for regulators, but also, for market makers, for the authorized participants that help to facilitate trades in ETF units and in the underlying asset class. So I do think it's a matter of when and not if on the Ethereum ETF. And obviously, that is being priced in to a degree into the value of ETH today, outperforming Bitcoin, but also into Ethereum, the Grayscale Ethereum Trust, which is the best proxy for this. The Grayscale Ethereum Trust discount to NAV, to net asset value, it's gone from like 55% to about 14. Still a lot of meat on that bone, but it's definitely narrowed quite a bit. And I think that's because a lot of people are pricing in the potential that this will convert. It's worth mentioning, just for people who don't know, ETFs typically trade in and around their net asset value. So the discount suggests that people are pricing and there's still some uncertainty that will occur. I think maybe that's an interesting thing for people to take a look at. So let's shift gears.
I have a question. I was not too familiar. Did the Grayscale Bitcoin one convert to an ETF?
Yeah, it uplisted. Yeah.
Okay.
So it converted, and when it converted, it shot up. It outpaced Bitcoin because it, even at the day before launch, had a discount to NAV of a little over 5%. And in a way, you could sort of say, like, what was the best indicator of the probability of this getting approved or disapproved? Like, what's poly market? Was it what analysts were saying, or was it was probably about 95% probability, and that was reflected in the discount that the GPT had, right? Like, I think that was like, the market is typically correct about those kinds of things. Like, if it was a done deal, it would have been 99%, with the difference being time value or something. Okay, so just switching gears then to Osmosis and to the broader ecosystem. This is an industry, pardon me, where things do come in cycles, and it's very narrative driven. The last time around, the narrative was around, alternative layer ones. It actually began originally with DeFi, decentralized finance, but then moved into these alternative layer ones. As the Ethereum network kind of became a victim of its own success, we saw fees going up. And so these alternative platforms emerged to try and sort of handle the demand for block flow and for state and block space and state and so forth. And now, looking into the next cycle, everyone's trying to figure out, like, what the next narrative is. I think that's sort of, to your point, Bitcoin cementing its role as a sort of alternative asset for everybody, including traditional investors. That's one narrative, the digital gold concept. But there's also this narrative around application chains. And this is something that Andrew and I have been talking about, for a very long time. And that leads to a lot of people to sort of discovering or rediscovering the whole Cosmos world. And I think a lot of people are surprised that when they look at the Cosmos world in a little bit more detail, that Cosmos itself, Atom, is one of several different, nodes on this network. And in fact, it's actually Osmosis that's had the most traction over the last few months. So tell us a little bit about, like, your view on Web3 going into this next cycle, the app chain thesis, and then what's Osmosis's role in all of that?
Yeah, sure. I think that, my view on Web3 as a whole, like I said, Bitcoin, I think DeFi is still like the primary application for crypto, for blockchains. I think that's what it was started as, and that's what it will continue to be. I think we're going to see like a few new like use cases that like really grow. I think last cycle NFTs sort of became this thing that came out of nowhere and became this like giant thing. I think we're going to start to see more social stuff as going to be like a big, I think we saw the early iterations of it, some like, friend tech and stuff like that. But I think we're going to start to see like, I feel like friend tech was like the, NBA top shots of the NFT cycle. We're going to see something where social is just going to grow and grow, in my opinion. So, what one slightly disheartening thing is I still do see like so much overemphasis on just like infrastructure for infrastructure's sake. We see just so many people just like building, which is on one hand it's good, like it's helping push forward the space, right? But at the same time, I think it is like we're just our thumb is too high on the infrastructure scale, less on the application scale, right? There's like, probably more rollups than there are apps being built on the rollups, and it's like the same apps just being deployed on like 20 different chains or rollups and stuff, and like without a lot of like differentiation between these offerings. So I would, as always, like to see more of a shift towards like application development. And our belief with Osmosis and Cosmos more generally has always been that the best application, like iteration on application functionality, will come through like vertical integration of applications with the blockchains themselves. And this is like the concept we call app chains, which is basically like, Osmosis isn't built on an L1 or an L2 or something. It's built as its own blockchain. And this gives us like a lot of power. There's this narrative right now about like modular ecosystems, like modularity, and I actually think this is like a little bit not going in the right direction, because modularity, what happens is like, well, on the flip side of modularity is vertical integration. And our take is that to build the best products and to build the cheapest products, you need to fully vertically integrate. Apple is able to build like extremely well-designed products by vertically integrating everything from they build a lot of apps, they build the OS, they build the phone, they build the chips. SpaceX is able to build like the cheapest rockets because they fully vertically integrate everything, right? They don't they like minimize the amount of outsourcing that they do. Meanwhile, if you have like a modular stack for blockchains, everyone's going to want to charge their fees, right? You're going to pay for the DA layer, you're going to pay for the sequencer, you're going to pay for like the roll up, like the application is going to charge its fees. And I think this is just going to like the fees are going to accumulate, while with a vertically integrated system, that's what's going to provide the best, performance and the best like UX.
Interesting. And so it's sort of an interesting point because it kind of goes against the way in which like the corporate world has evolved. The corporate world, a long time ago, all companies were very vertically integrated. Like the Ford Motor Company didn't just make cars; it had a timber mill and a rubber plantation and a steel plant. The plant in Dearborn, Michigan, put in raw materials and spit out Model Ts, and that's because Henry Ford understood that it was cheaper to do all those things inside the boundaries of the firm than it was to do it in an open market. But these days, SpaceX notwithstanding, most big companies are highly reliant on vendors, suppliers, outsourcing, offshoring, you name it. Like Apple, for example, has got like 165 vendors and suppliers in mainland China alone. And they don't make phones. They design in them and they do R&D and they do marketing, but they don't actually make the phones, right? And so it's interesting to sort of think about the blockchain and to say, well, maybe normally, in an open market, maybe the most efficient mechanism is for everybody to be doing their own thing and for us to find the best price and allocate resources and so forth. But you're arguing for something different, which is that, maybe it's cheaper and more efficient to do things inside the boundaries. And I think that's, I've never really thought about that. And I'm going to have to ponder it a little bit more. So just moving on to Osmo specifically. So, your tokens done very well recently, and we've seen a lot more liquidity on the network. And one of the reasons for that, it appears, is that there's finally an easy way for people to own dollars on the Cosmos network and to use them to buy and sell other kinds of assets. And we actually had the team from Noble on, or sorry, we're going to have them on. I can't remember. Anyway, just to talk a little bit more about that. I'm just wondering your perspective. We're going to have them on next week, and we'd love to just get your perspective on the impact that that's had on you and on the whole space.
Yeah, it's been really helpful because it's made it a lot easier for people to bring over like USDC, right? For an exchange, like stable coins are like the lifeblood, right? That's like the base liquidity pair for everything. And so, previously we had like USDC already for the last like year and a half, like ever since the collapse of Terra. So, for a long time, Osmosis, like UST was like the primary stablecoin within Osmosis. And Osmosis was the biggest DEX for UST. And once that whole system kind of collapsed, it hit Osmosis pretty hard because our liquidity dried up. We went at our peak last cycle, we had like $2 billion of liquidity.
Yeah.
But like once the stablecoin collapsed, like it, all that liquidity dried up. But now with like we were able to like make do and like rebuild our product using the bridged USDC. But I think there's just been a lot of one, bridge USDC is expensive. The bridging costs are expensive. But two, I think people just don't have the same level of trust in that as they do with something native. And so this is kind of where like native Cosmos native USDC comes in, like built by Noble. And so it basically allows it so people can one-click convert their USDC, not just from Ethereum, but from any of the USDC systems, right? Whether it's Solana or any ETH2, you can convert it into Cosmos USDC. So that's important because it actually one of the big challenges of the onboarding of USDC was it's like difficult to Ethereum gas costs are so expensive, but now you can like bring it in from like Arbitrum or Optimism or Polygon from much more cheaply. So that makes it the free flow of like stables between the ecosystems. The cheaper it is, the more freely these like liquidity can move around, which is important. And and now it also makes it so any normal sorry. And then the other big thing that happened is like now Coinbase is also like supporting USDC direct deposits and withdrawals to Cosmos, right? And so before that, like the only way to get liquidity and like assets into the Cosmos ecosystem was primarily through Atom, which was like a major cap token listed on almost every exchange. Then Osmo became eventually got listed on Coinbase and Binance, but still has like lower on sex liquidity than something like Atom. But now with USDC, if you can just like get like USDC from Coinbase and just like bring it in, that makes it much easier for new capital to enter the ecosystem.
So obviously, you guys play kind of a central role within the Cosmos ecosystem as kind of like, the de facto liquidity hub in a lot of ways. What are some of the kind of, I guess, interesting growth narratives you see in the Cosmos ecosystem? Like, what are the things you're most excited about? Whether that's kind of like new chains or new applications.
I mean, a couple of things I'm pretty excited about. I think Cosmos has become the de facto standard stack for building perps dexes. Because like DYDX, which is the biggest perps dex in crypto, has like built, they launched their DYDX chain. But then Hyperliquid, which I think is number 2 by volume, is also a Tendermint based chain. You have Injective, you have Nibiru. Spoiler alert, Osmosis is also working on a perps dex as well. So I think like to build a perps dex, like you need perps dexes just don't really work on like generalized L1s. There's a lot, they just won't give you the performance you need. They won't give you a lot of customizability you need. They won't give you the like guaranteed Oracle updates that you need. And so that's why you've seen that like all of these like the main the biggest perps dexes by volume have all shifted towards like app chain effectively app chain ones. Maybe the only exception right now is Vertex, but they're kind of running a pretty centralized system there. So I think we're going to start to see more and more like I think perps dexes are just going to become a growing market. And so I think we're going to start to see more of that go onto the Cosmos stack. Other stuff that I think I'm just like, I mean, part of what just makes me excited is just like the stack is like winning, like Before Osmosis, I was a core dev of like just Cosmos more generally and helped build the Cosmos SDK. And it's like just really exciting to see that, like, if you look in like the top 150 assets by market cap, like probably like at least I would say like 15 to 20 of them are built on the Cosmos SDK. And this is like really important, right? Because this is like uh there's network effect around the stack. Like if you're building a custom blockchain today, like the Cosmos SDK is like there's three stacks that I think are competing right now. It's like the EVM, the Solana VM, and the Cosmos SDK. And the EVM and Solana VM are not really designed for app chains. They're designed for generalized L1s. The Cosmos SDK is the one that's designed for app chains. And now you have like more and more chains like Celestia and Thorchain and Injective and obviously Osmosis and like, Axelar, Wormhole, like all of these like teams choosing to use the Cosmos SDK as their stack. And what this does is it brings in more investment into like making the stack better, right? One team does a performance improvement, everyone benefits. A custodian starts to support one of these chains, all of these chains are now supported by that custodian or that fiat on ramp or anything. And so I don't know if you guys saw that, like, it probably got drowned out with all the ETF news yesterday, but Ripple just announced that they're building like an official sidechain that is Cosmos SDK, like Cosmos SDK based sidechain.
I definitely
So
that.
yeah, so that's like really cool too, right? And so it's like, I think it's just been exciting for me to see that like winning of the Cosmos SDK stack.
Yeah, absolutely. And I think a lot of people are wondering what that means for value accrual in the Cosmos ecosystem, right? And I think people get kind of preoccupied with that topic, but it's interesting that the narratives can be huge drivers of meme interest, right? Whether it's like Ethereum as the world computer and DeFi built on top, or if it's like Solana is ultra fast, or if it's Cosmos as the hub and all the rest of it. Like I just think it's going to be an interesting period of time to see how this all kind of plays out.
Yeah. I mean, my answer to value accrual, obviously a bias, is you want to be. I think the value accrual is as the network grows, it's the place where you trade the assets, right? As crypto grew, like Binance and Coinbase are probably some of the biggest winners out of it, and so I think like Osmosis being sort of the liquidity hub for this like Cosmos ecosystem is probably where the value is going to accrue.
Where does Osmosis stand relative to other dexes on Cosmos? Are there other dexes on Cosmos? Like, what's your market share?
Yeah, there are other dexes on Cosmos. We are still by far like the dominant one, like over I would have to someone should actually do like an Osmosis dominance tracker. I'm not sure I haven't really seen one. But there's a couple other chains. There's one called Kujira. They've done a pretty good job. Astroport is one that sort of takes more of a multi-chain approach. So in Cosmos, I talked a lot about like the app chains. That's not to say that a lot of the chains in Cosmos are not app chains, right? Some of the chains are like just generalized L1s, and that's okay, right? The Cosmos SDK stack lets you do that. So some of the chains like, Say or Neutron, these are just generalized L1s. And, Astroport has taken the strategy of instead of building an app chain, they're going to go deploy, like be on all of these generalized L1s. So they've gotten some adoption from from that. On the spot deck side, I would say really those are like the three biggest right now. It's just Osmosis, Kujira, and Astroport. Sorry for anyone if I'm forgetting. Someone's probably gonna rage in the comments. I think, and then like I said, we're seeing a lot of different perps dexes as well. So that's gonna continue to grow.
Yeah, interesting. I mean,
but I think as of now, like out of those, like I'm pretty sure Osmosis probably has like at least 75% like volume market share.
Yeah, AY is our perps expert.
Yeah, and then the for us, something that we care a lot about is like how many assets are we like the primary market for, or at least the primary DEX market for, right? Like once upon a time during Osmosis used to be like the DEX for like 3 top 20 assets, right? It was Atom, Luna, and UST.
Yeah.
2 of them don't really exist anymore. So then we kind of got shrunk down. Okay, we were still the primary DEX for Atom. That's good. But it's like,
What's
our
next?
take is like, yeah, what's next, right? And so we saw TIA, like, on the horizon. And so we kind of made a big bet on like, okay, how can we make sure we are the primary DEX for TIA? And so we did a lot of work there, and we are now, right? We are the primary DEX for TIA, and I think our goal is just like, okay, make sure we find more and more assets where that continues to be the case for.
Yeah, absolutely. AY?
Yeah, one other question, I guess one thing I am kind of curious about is, do you think there will be kind of like another, maybe not algorithmic stablecoin, but crypto native stablecoin, whether it leverages Cosmos or not, that really kind of takes off and maybe gives kind of like one of the more traditional stable coins like Tether or USDC like a real run for its money. I presume it will likely be probably not fully under collateralized like Luna was, but I'm just kind of curious because there's kind of a lot of interesting experimentation happening right now with there's Frax, there's some new projects in the Cosmos ecosystem as well that are sort of building out their own stable coins that are built into the chain directly. Yeah, just kind of curious.
Yeah. So I think that there's 2 approaches. One is like what Maker is doing. So Maker is going kind of down this strategy of like shifting towards like RWAs. And I spent some time with Varun understanding this whole Maker endgame thing, and it's actually like it is very interesting, right? It's like, but it is at the end of the day still like not fully 100% decentralized, because you still sort of need like custodians to like hold these RWAs. But the idea of like the end game or like of the Maker goal is that like, okay, we're gonna build, diversify this, right? We're not gonna the DAO basically is not gonna like put all its eggs in one basket. It's gonna be like well diversified across a number of different things. So it's like I think that is like, honestly, I think that's probably what's gonna like reach scale. Like I think that's gonna grow. The other option is I do think I'm still interested in like people building truly algo stables. Like there is one project in Cosmos right now called Mint Cash. It's actually being built by a couple of the ex devs of Anchor on Terra, and so they're building this thing. And I think it's interesting. They're following kind of like an algo stable-esque thing of Terra, but what they're doing is they're actually backing it with Bitcoin. And so you basically can mint new new coins, like new stables with Bitcoin. And what they've done is they've made it so part of what happened with Terra, right, was there was like everyone, as soon as things get shaky, everyone ran for the door, right? And like the idea of UST was like, oh, it gets value because you can like convert it to Luna, and then Luna you can like you can sell that Luna for US dollars. But like the problem is like the thing, Luna holders were just gonna like wanted to get out as well, and like they were both just like death spiraled together. What the Mint Cash system is trying to do is say like, hey, you can take out your stable. So the stable coin is called Cash. They have like sort of first right of exit into Bitcoin versus mint holders, which are sort of the staking token of the system, right? And so you can come in with Bitcoin and you can create either mint tokens or you can create cash tokens. And the mint tokens are the ones who get like any of the cash flows from the system and like the interest rates from the lending protocol and everything. But they get second right of exit, right? Like they have to be staked, so they have to wait 3 weeks if they ever want to exit and take out the Bitcoin, while the cash holders get first right of exit. So and they also rate limit how quickly you can exit, right? So they say like, hey, if you want to exit like right now, like we're going to increase the slippage that's happening, right? Like it kind of gives it, so kind of what happened with Terra was like it kind of created this panic system where everyone like rapid sold. The claim for Mincash is if you can like settle that panic reaction and like make it so people wait, and so that way if you like wait to exit, you actually get more Bitcoin out. The hope is that this will actually create a more stable system. Will this work? I have no clue, but I am excited that people are still experimenting and like trying to push forward the space of decentralized stablecoins.
Yeah, you have to ask yourself, like, are there reasons that it's a bad idea, or are the implementation challenges, like all the design parameters? And I'm actually not sure yet.
Yeah.
Comes to them, because frankly, like, all have seemed like interesting projects, then they've all had fatal flaws. And so maybe the solution is this sort of Web 2.5 model, right, where you've got people minting stable coins, but the assets are held in trust and financial institutions, right, like the way USDC operates. And I don't know, we'll see. It's going to be an interesting next little period here. Well, listen, Sunny, thanks so much for joining us. It was a great conversation. Any parting words? Where can people find out more about Osmosis, you, etc.? Yeah, what should we expect sort of on the horizon here?
Yeah, you can find us at follow us on Twitter. We're at Osmosis Zone, and you can follow me I'm at Sunny A97. And you can try out the product, osmosis.zone. Yeah,
as someone who's used it, I think for non-crypto native folks, it's a pretty sleek user experience, and it's a lot of fun. And I love I've always loved your marketing and design as well. It's sort of whimsical and very approachable. All right, Sunny, thanks so much for joining us. That concludes today's episode of DeFi Decoded. We will be back next week with another terrific couple of guests. I think I sort of revealed who that's going to be, but we're going to be talking to the folks from Noble about US dollar stable coins on Cosmos and what that means for the whole ecosystem and for the broader world of Web3. So stay tuned. That's all, and we will see you next time. Cheers. Bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.